South Africa's ongoing blackouts continue to have a major impact on businesses. While they're scrambling to keep the lights on and operations running, they have to deal with economic uncertainty. Now, statistics show that company liquidations appear to be on the rise. Let's discuss this further with Sandra Beswick. She's a senior business rescue practitioner and director of Fluence Capital. Thank you very much for joining us this afternoon. And maybe let's start with the trend that has emerged over the last let's say 3 years with the advent of the COVID-19 pandemic. Have you found that more and more businesses have opted to close their doors simply because they can't stay afloat?
Yes, we have. Good afternoon, everybody. The businesses since COVID have started to, we found more liquidations and business rescues happening because businesses are facing more financial distress. What we're finding now post-COVID is that the banks are now not, the honeymoon of the post-COVID era is over, and the banks are starting to call in their facilities. They're not giving out loans like they did during the COVID period. The business rescue processes and number of rescues that we did after COVID and during COVID were much lower than we expected. But we are expecting to see a rise in that happening now in 2023.
Sandra, why are they choosing to opt for liquidations as opposed to a business rescue process? Because at least with business rescue, there is an opportunity for the business to recover and continue operating. Is it perhaps an issue of cost? Is business rescue expensive as opposed to just liquidating a company?
It can be an issue of cost, particularly for small businesses that turn over about less than 10 million rand a year. It is very costly because it's a standardized regulatory process. But I think also what's happening, people are leaving it too late. They're in denial that they are in financial distress and not taking proactive action when they should be, when they see the first signs of distress happening. And that particularly you can see when your cash flow is suffering, you don't have enough money to pay your employees at the month end, you can't pay your overhead expenses, you can't pay your creditors. So those are the first warning signs, and you should be proactive and try and get some assistance or look at what's happening in your business and try and save it rather than liquidate it.
And then with liquidations, does it automatically mean that you don't have to pay the people that you owe, the employees that you had simply just get out of work and it's just a closing of the shop? Or is it a little bit more complicated than that, in that there are still obligations that you would still need to face?
It's a legal process. It's handled by the courts. You apply to the court to liquidate the company. A liquidator gets appointed. He handles or she handles all the sale of the assets, and those proceeds from the sale of the assets go to paying the creditors. You can't get out of paying your creditors. You have to pay them. And your employees in liquidation get a standardized rate when the company is liquidated. And then if there's anything over in the estate, they will get paid out. While in business rescue, employees will get potentially a retrenchment package if they are retrenched.
Yeah, and let's speak about the risks that are facing, especially small to medium businesses in South Africa at the moment. We've spoken about the issue of load shedding, but the uncertainty around economic growth, and now, Sandra, the national minimum wage that these labor-intensive industries like the retail industry and the like will have to contend with pose as a risk for businesses to stay afloat.
Yes, your salaries are a part of your overhead expenses, and they keep rising. If they keep rising, it does impact on your cash flow. And as I said, small businesses are really finding it difficult trading, particularly in load shedding, and making plans to keep the businesses afloat and keep them going. I think there's also a cut down by consumers. Things are rising. People can't afford certain items, and they rather do without than go into debt.
So as someone who has seen or has been in the industry for a while, for a business who has shown rather those symptoms of distress that you earlier described to us in terms of cash flow and not being able to meet debt obligations, What would you say is the best option for a business in general between business rescue and, of course, going the liquidation route?
Well, if the business has commercial viability, and by that I mean, has it got contracts, has it got potential clients, has it, to sell to, has it got a market? If it's got a market, then business rescue possibly is a better alternative than liquidation. But if there's no commercial viability for the business, then obviously liquidation is the final resort.
And then just a final thought from you, Sandra, just based on our discussion that we've had, trends in the medium to long term, are you anticipating the current trend to continue, or do you find that you will start to see business start to weather the storm a little better?
I think we will see a rise in liquidations going forward for a couple of months. But, it all depends. I think South Africa is quite resilient, and hopefully we can claw back from the load shedding issues. We clawed back from COVID, and I'm sure we can try and claw back from the issues around load shedding and work out a plan of how to keep our businesses going.
Thank you very much for that, Sandra Beswick, who's a senior business rescue practitioner and director of Fluence Capital, talking to us about the rise in liquidations and, unfortunately, the trend set to continue for the foreseeable future.